Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 18th, 2026, and we're diving into Kenvue's recently released earnings report for the fourth quarter and full year of 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Kenvue, the world's largest pure-play consumer health company, has just released its financial results, and there's a lot to unpack, especially with their strategic moves and financial performance in the last quarter.
Revenue and profitability overview. Let's start with the top line. Kenvue reported a net sales increase of 3.2% for the fourth quarter, with organic sales growth of 1.2%. However, for the full year, net sales declined by 2.1%. John, can you elaborate on these figures?
Absolutely. The fourth quarter's net sales growth was primarily driven by a favorable foreign currency impact and organic sales growth. The organic sales increase was due to favorable value realization, although it was partially offset by a decrease in volume. For the full year, the decline in net sales was mainly due to a reduction in trade inventory by certain customers and low seasonal incidences, particularly affecting the self-care segment.
And what about profitability? How did Kenvue perform in terms of earnings per share?
Kenvue's adjusted diluted EPS for the fourth quarter was 27 cents, which is a positive surprise compared to the analysts' forecast of 22 cents. This indicates a strong performance in managing costs and improving operational efficiencies, despite the challenges in sales volume.
Operational efficiencies and future outlook. John, let's talk about Kenvue's operational efficiencies. The gross profit margin remained flat at 56.5%, but the adjusted operating income margin improved to 19.9%. What does this tell us about their operational strategy?
The flat gross profit margin indicates that Kenvue has managed to offset inflationary pressures and foreign exchange headwinds through productivity gains and supply chain optimizations. The improvement in the adjusted operating income margin reflects these efficiencies and the benefits from their Our View Forward initiative, which focuses on cost management and operational improvements.
And looking ahead, what should investors keep in mind, especially with the pending transaction with Kimberly-Clark?
With the pending acquisition by Kimberly-Clark, Kenvue is not providing forward-looking guidance. However, the strategic combination is expected to create significant value, and investors should watch for updates on regulatory approvals and the transaction's completion, which is anticipated in the second half of 2026.
Segment performance and strategic initiatives. Let's delve into the performance of Kenvue's business segments. How did the self-care, skin health and beauty, and essential health segments perform in the fourth quarter?
The self-care segment saw a modest sales increase of 1.5%, driven by a foreign currency benefit, though organic sales declined due to lower volumes. Skin health and beauty grew by 2.9%, with strong contributions from innovations and commercial execution outside North America. Essential health was the standout, with a 6.1% increase, propelled by broad-based growth across major regions.
What strategic initiatives are driving these performances?
Kenvue's focus on innovation and market expansion is key. They're leveraging their iconic brands and investing in new product development to capture market share, particularly in regions like Asia-Pacific and Europe, where they've seen significant growth.
Financial health and strategic transactions. John, let's discuss Kenvue's financial health. They reported a net cash flow from operations of $2.2 billion and a free cash flow of $1.7 billion. How does this position them financially?
Kenvue's strong cash flow generation indicates robust financial health, providing them with the liquidity needed to support ongoing operations and strategic initiatives. Despite a total debt of $8.5 billion, their ability to generate free cash flow is a positive sign for sustaining their financial commitments and investments.
And with the Kimberly-Clark acquisition on the horizon, what should investors expect?
The acquisition is a significant strategic move that could enhance Kenvue's market position and operational capabilities. Investors should monitor the progress of regulatory approvals and the integration plans post-acquisition, as these will be crucial for realizing the anticipated synergies and value creation.
Key takeaways. As we wrap up, Kenvue has delivered a solid performance in the fourth quarter, with an adjusted EPS of 27 cents, beating the forecast of 22 cents. Their strategic initiatives and operational efficiencies have driven a 3.2% growth in net sales, and the pending acquisition by Kimberly-Clark is set to create further value. John, any final thoughts?
Kenvue's focus on innovation and market expansion, coupled with their strong cash flow, positions them well for future growth. The Kimberly-Clark acquisition is a pivotal development, and its successful execution will be key to unlocking additional value for shareholders.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analysis. We'd love to hear your thoughts on Kenvue's performance, so leave a comment below. Until next time.